Just a little context about the stock. This is the daily chart and the trade takes place at the most right candle visible. There is a hype and speculations about a possible undisclosed short position and it is a short squeeze setup. The stock has already spiked 1000% over a couple of days, so I wouldn't be aggressive long, but it has put in a day of consolidation at the top, and given what the tape shows, I think an entry was justified in this case. Pay attention to the time and sales. 448 has already bought thousands of shares. Then look at the level 2. It only shows 100 shares AMEX at that price. Some people call that an iceberg order, but you hear me refer to it as a held order. It is not recommended to trade it by itself, but combined with other variables, a held order can lead to a trading decision. Pay attention to how much size it keeps buying. The decision I make in this video is to get long above 450 using that 448 support as a stop level. This is a scalping approach, so if 448 buyer drops, I no longer have a reason to be involved. It is important to note that seeing the buyer on the tape is not the only reason for being involved. I am combining this with other variables, which in this case are the stock is above the opening print and is consolidating for a few minutes, and also the daily is squeezing because of short squeeze hype. Notice 450 kind of holding the offer, which makes it a very tight battle between 448 on the bid and 450 on the offer. My mistake here is I buy 450 instead of above 450. I should be buying 451, 52 with a stop below 48. And notice how much 448 keeps buying. This is an unusual hold. The good thing about orders like this is they give you an objective support to resistance levels, at least in the short term. This means that if you have a reason to want to be involved in a stock, but don't have a reason to enter yet, seeing an order like this that supports your thesis can give you both an amazing entry point and a great risk to reward ratio. Notice a couple of things about the upcoming breakout. First, how much the tape speeds up. That's what you want to see in a breakout. Also, you want to see a move away from the breakout price as well as bids stepping up and volume increasing. The second thing is me taking partials just as the stock starts to break out and volume starts picking up. I should always think about what my reason to enter and exit are, and in this case I had a reason to enter but I don't have a reason to exit yet. That's why I think executing the first partials like this is not a consistent way of managing the trade, and I should be more patient in waiting for reasons to exit to present themselves. Notice here that AMEX is back to the bid, but now he is at 466 and he keeps buying much more than he shows. Since it's again AMEX, we are justified to think that it is the same buyer and he is stepping up. This means that he could step even higher and following him is the best course of action. I should remain long until he drops. If he drops, don't hesitate to exit on the first bid present, as it is highly possible that such a strong bid disappearing might cause a flush. Keep in mind that this is a scalping approach and must be treated as such. If the bid drops, I have to hit out of my position on the next bid. It is also worth noting how 468 is holding the offer here. So it's again a tight battle between 66 on the bid and 68 on the offer. The difference is that the battle at 48 was happening during a consolidation on the 1 minute, meaning that the chart and the tape were aligning for a good trade. Buying in front of 466 would be very aggressive as the stock already ticked up a bit. You need to have a very strong thesis in order for a buy to make sense there. Now that the 466 bid drops, I no longer have a reason to be long and exit the remainder of my position. Note that by saying I have no reason to be long, I mean very short term, as this was a scalp trade with the potential for a squeeze. If I have a bigger time frame thesis, I should be wider with my stop and use different variables in determining my reason to exit. That was the tape I had, so let me sum it up. Even though the trade itself was around the tape, it was a combination of a couple of factors. It was a scalp trade, and when taking a scalp, you should not decide to treat it as a trade to hold in the middle of the trade. The most important moment was 448, printing many times more than it chose and do it in on AMEX specifically. Then he moved up to 466 and did the same there before dropping and invalidating the scalp. The main mistake was taking partials right after the tape sped up above 450 as well as actually buying 450 instead of 451. This is my first video and I intend to continue doing such tape and trade reviews in order both to improve my trading and hopefully give new ideas to people looking to learn some tape reading. I will do my best to improve the quality next time, and if you liked the tape and found some concepts helpful, I hope you liked the video as well. I will be covering different tape reading concepts in the future, and please keep in mind that I am only expressing my views and should only be taken as educational suggestions. Thanks for watching.